You announced your Tesla short back in the fall of 2015. So this has been, what, a 5-year saga. And all your shorts, I remember you're saying, are capped at 5%. Are you still max short on Tesla?
No, we're not max short, only because there's not only, but we are still short. But there's now so many other things to do, including in the EV space, that we found lots of other things that are maybe even crazier than Tesla. But we still do have a position, and it's been painful, clearly.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, we're going to be hearing from Tesla's short seller Jim Chanos, who, well, over the past 12 months or so has certainly had a tough time with his Tesla short position. Now, I honestly think Jim seems like a pretty nice man and relatively intelligent guy too, but on Tesla, I have to say he's completely dead fucking wrong. Has been for some time. I think it's going to be very interesting, perhaps even informative, to hear some of his reasoning around why he's short Tesla. In a nutshell, they're an automaker. And of course, those of you who've been watching the channel or just aware of Tesla for a little while will probably beg to differ on that slight but rather important point. I think we can all learn a lesson about hubris, being able to take a step back and admit when we're wrong. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
So there are frauds, and then you mentioned there are business balance sheet problems. There are things where something's very hot, like EVs. What category is Tesla in?
I think that it's really a business model and a valuation issue with Tesla. I mean, there's some things we don't like about their accounting as well. But I mean, this is a company trading at $500 billion market cap. It'll have revenues this year of $30 billion.
Mistake number 1, looking in the rear view mirror. This year, right now, yesterday, this is not how you value a growth stock. This is not how you understand a growth company. You must look forward into the future and work back from there. The fact that Tesla's building 2 factories at this point in time, Berlin and Austin, and expanding Shanghai, which will ultimately do over 1 million vehicles per year, Berlin 2 million, and who knows how many Austin will do. You kind of look at this stuff and account for that and then factor in that to what your valuation is today. That's kind of how this works. Investing is about growth in the future. You tend to buy an asset and then rather than go backwards in time, you go forwards in time while you hold that asset, right? So you should be looking forward. I mean, very easy mistake to make, but this is kind of important. See, the thing is, Tesla's growing at insane, staggering, ridiculous rates. And I also agree the valuation of Tesla stock has gotten ahead of itself. But that's because people can peer into the future and see how bright that future looks. This is why Tesla's valuation is so high right now. And this is why so many people are fumbling the football and not understanding what they're looking at. Because they're looking at today's revenues, yesterday's revenue. They're not looking into the future, not accounting for that insane growth, and of course, also just thinking they're an automaker. Back in 2014, 6 years ago, Tesla was telling us that they were aiming to deliver around 500,000 vehicles in 2020. Everyone thought that was completely and utterly ridiculous. And here we are in Q4 2020. Tesla is on track despite a global pandemic to actually deliver 500,000 vehicles. And Tesla is aiming in 2030 to deliver around 20 million vehicles per year. You kind of do need to give Tesla a little bit of credit on past execution against their past goals and think, well, if they do produce 20 million vehicles in 2030 and sell them, what does that mean for the stock price?
And despite what everyone says, they're still an automobile company. They make cars.
Jim, poor guy just can't seem to break out of his paradigm that Tesla is just a mere automaker like all of the others.
And so they're competing with other companies that make cars.
Yep, just like Amazon is competing with other retail outlets. Just they're totally the same thing, yeah. Never mind the fact that Tesla has never spent a cent on advertising because their products are so good they sell themselves. Never mind that other automakers are now recognizing that they need to catch up to Tesla and spend tens of billions of dollars in doing so. Never mind the fact that there's 150 odd thousand people subscribed to this channel to watch a guy who's high half the time talk about Tesla. Where's the VW equivalent of solving the money problem? Or the Ford version? Or the VW version? Or the GM version? Spoiler alert, there isn't one because they're not really worth talking about. That alone is actually a really important data point. There's no shame in being wrong, Jim. I mean, just have a look around. Like the box that you've put Tesla in, you may not have noticed, but they don't fit in that box. And the longer you seem to be living in this delusion that Tesla is just a mere automaker like everybody else, the more pain you're going to experience being short Tesla stock. I'm just saying.
And increasingly, those other companies have EVs as well.
That nobody actually wants to buy because they suck shit. Shout out to everybody who still uses Yahoo for search or Bing.
And so, Tesla, every bull market has a stock that people pin their hopes and dreams on. Back in the .com era, it was Cisco and Yahoo and a few others, JDSU. And certainly one of those stocks this go around is Tesla, because for some holders it's an EV company, for other holders it's a clean energy company, for other holders it's an autonomous vehicle company.
And for Jim Chanos here, it's just a car company, right, Jim?
And it's whatever people want to believe that Elon Musk is touting.
So remember that time that Elon Musk touted that SpaceX were attempting to develop reusable rockets? Jim, you still with me, mate? You remember when yeah? And you remember how Tesla, that secret master plan in 2006 where they laid out their plan? They touted that they would start with a high-end luxury EV, use the profits from that to actually develop a more mass-market vehicle. You remember when Elon Musk touted that? Remember when Elon Musk touted that they were equipping all their vehicles with enough sensors, the full suite, so that in the future when they solved the software problem, they could enable full self-driving over the air? Remember when Elon Musk touted that, and now full self-driving beta's being expanded and we're very close to a wide release throughout the network, probably sometime next year? Remember when Elon Musk touted that Tesla would need to build this gigafactory because, they would be building lots of vehicles in the future? Remember when Elon Musk touted at Battery Investor Day their plans to bring their battery costs down? You guys see where I'm going with this? Yeah. Remember when Elon Musk touted that their goal with the Model S was to develop the world's best car, and then it won every award ever and actually is the best car ever built? Do you remember that, Jim? Yeah, just maybe factor that in to your future considerations about what Tesla is. Just saying.
And that the traditional rules of valuation do not apply to it. I would just point out, as I always do, that for the trailing 12 months...
Jim Chanos, you are killing me, dude. Rearview mirror once again. Trailing 12 months. Why are we looking backwards and using that as a way to reason forward instead of looking at things like production capacity, expansion of facilities, how quickly they ramp production, these kind of things, declining manufacturing costs, declining battery costs? Do you not sort of think that it matters kind of to look forward instead of backwards, Jim? I mean, Jim? Hello? Jim?
Tesla has not made any money selling cars. Of the trailing 12 months, whatever profit they've shown, it's been very, very low, has been from selling tax credits. So for all of this, for all of their market leadership and selling $50,000 on average cars, they're still not making any money doing it.
Oh, I see. The regulatory credits thing again. Yeah, good point, Jim. That's a really good point. I've never dismissed that before for being completely patently absurd. I'm not even going to cover it at this point in time. I've said it 400 times. Let's approach this from a slightly different angle. I'm not going to be too dismissive of how stupid it was to raise in the first point, capital management, money in, money out. Oh, hang on, we've got all this money in, let's spend that on a gigafactory. No. Let's approach this from a slightly different angle. Why would it be that automakers are willing to pay Tesla literally billions of dollars? A competitor, using the term loosely, competitor there. Why would these companies be paying Tesla billions of dollars? Now, think about that for a moment. The only reason that these companies would be paying Tesla billions of dollars is because they're either unwilling or unable to make electric vehicles that people actually want to buy at a scale large enough to avoid these enormous fines. That should actually tell you a huge amount about Tesla's future runway, given the fact that they need to be making EVs and these companies literally can't or won't, therefore need to pay Tesla billions of dollars to eventually put them out of business.
Have you ever met Elon Musk or talked to him?
I've never met Elon Musk.
Have you ever had a conversation with him or even a tweet firestorm with him?
I don't know about a tweet firestorm, but no, I've never had a conversation with him.
Well, what do you know? Another Tesla short who's never even had a conversation with Elon Musk. Why am I not surprised?
What would you say to him if you do get to meet him?
I'd say job well done so far.
Going back to that idea, people project whatever they want onto the company. You announced your Tesla short back in the fall of 2015. So this has been, what, a 5-year saga. And all your shorts, I remember you're saying, are capped at 5%. Are you still max short on Tesla?
No, we're not max short, only because there's not only, but we are still short. But there's now so many other things to do, including in the EV space, that we found lots of other things that are maybe even crazier than Tesla.
Oh, would you look at that? A happy ending. I think Jim is actually on the right track here, although reducing that Tesla short position, pro tip Jim, just can it completely. There's definitely some good short potential in the wider EV space. Now, I'm not going to name names here, but let's be honest. There's a whole bunch of absolute moronic money at the moment in the stock market chasing after the gains. People feel like they missed out on Tesla. Oh, it's too late for Tesla. What's the next EV company? Hang on, let me read a headline somewhere. Okay, I'm going to invest in that company because I'm a genius investor. So yeah, anyway, I think the moral of the story here is Jim hasn't quite learned his lesson, but even so, he may have a shot at recouping the catastrophic losses sustained in shorting Tesla by shorting some of these other EV players. But Jim, please learn your lesson. As my merch says, don't bet against Elon. It's never going to end well. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.